Ladies and gentlemen, welcome to Wealth Down with me, your host, Nova BM. Markets are down and they're up again. So let's hope that the bottom is in and we are going to see a rebound. Now, today we're going to talk about a lot about risk assessment, risk management. I'm going to talk about my positions just a tinge. Didn't make that many moves last week, but it's really important to take a look forward and assess today's markets and also the future markets. Well, we never know what the future holds for us, but we do know that tariffs do influence the market's sentiment and earnings. And if earnings are influenced, then we have a problem. So let's take a look at the S&P. We have had a minor correction in the market. So we are here on a 1-year chart. This right here is our bullish trend that is going, you see here, is going pretty nicely for the last, so March of 2023, actually October of 2024 is, let me draw here a line, is where the bottom was in. And since then, the market just ripped. Now we had 2 wonderful years. And before that, we had also 2 wonderful years. Now we're going to have maybe a not so wonderful year. Although the last time the market surpassed the 200-day moving average was back here in October 2023. Since then, the market was ripping. Now, once more, because this right here in August of last year, 2024, didn't even touch the 200-day moving average. But now, we're at this point where the 50-day and the 100-day moving average are almost at the same height. The 50-day is trying to cross over the 100-day moving average, and the 200-day moving average was surpassed. We held this correction. It bounced back, but this is just technical analysis. Let's see what actually matters, and that is sentiment. Currently, the market is massively, in a pretty short period, oversold. Last time, let's take a look here back in 2022. Last time when this happened, it actually went pretty soft. So we had passing of the 200-day moving average. Then we had 1 day of rebound. This was in January. Then it went down again, down. Then a rebound, complete rebound to the 50-day moving average. And then it went all south. So I'm just going to say right here, this is exactly what I'm looking for right now. Let's just ask the questions. Do you believe, leave this in the comment section below, do you believe that we're going to see new all-time highs? So not reaching our old all-time high, which is at 6,142 on the S&P, because I don't believe we're going to see a new all-time high maybe to the end of this year. So I do believe that we still are in a long-term, let's take a look at it, a long-term bullish trend. It's not going to turn into a bear market. We didn't have a bear market since, never. Yes, we did have a bear market. This was back, extremely back, way back in the early, when we had the Great Depression. So let's just be honest, technology keeps advancing. And if you're a cautious optimist, then you should know that we are going to see new all-time highs. Even if it's not next week, even if it's not in the next 6 months, but we are going to go through some pain. And then everything will be okay once again. Now, this is the all-around market. If you are in really risky stocks, you are going to be washed out. I also have a couple of stocks that I would consider to be risky. Now, I want to make a really clear point here. I myself have made a lot of mistakes. One of them, for example, was a stock that I owned. It was back in December, not 2 years back. And it ripped 300% in just a couple of months. And greed came to me. So I didn't even take profits. I wanted more. And then it went down. And the last time I sold it, it was at minus 80%, 80-something percent. I just gave up. Actually, the stock never came back. So a couple of risk management tips. If you're up with something, take some profits. Become a good gardener of your garden. Your stocks that you own are your garden. You have some tomatoes, you have some carrots. Just pull out some tomatoes. So if you have 10 tomatoes, just take a tomato. Take one, take a carrot. Sell a little bit of your position if you're up. If there are positions that are not working, even when the market is ripping up, sell them completely. If they're not working when everything is rising, then they won't work when everything is going down, and they're going to go down really, really hard. So I would suggest, this is not financial advice, of course. I would never give financial advice. I'm not a financial advisor. I'm just a YouTuber managing a couple of portfolios. But as soon as this market rebounds, and it will rebound, this will have a rally. We are so massively oversold on most of the stocks. The rally is to be had. So the S&P on Friday closed with positive 0.55%, and the Nasdaq closed with positive 0.74%. So not much of a gain. Jerome Powell had his speech. Let's take a look at the economic events. We had the jobs report. Everything was okay-ish. Unemployment rate spiked 0.1%. This is going to spike much more in the upcoming months. But inflation will come down, and it's going to come down drastically, because if unemployment spikes, then people will consume less, which is going to draw down prices. But the prices are going to be drawn down. This also means that earnings are going to be drawn down. And the earnings expectations for this year are massive. Even greater than that, our biggest hope are the buybacks. And companies will start buying back their stock. One quick thing about buybacks. So for a buyback, there has to be a seller. And the sellers aren't we. They're not buying back their stock from the stock market. They're buying back their stock from the insiders. So inside a company, people want to sell their stock. Now, if you're inside a company, you want to sell your stock. And which price would you sell your stock? Because you would think about, well, the company should buy back their stock when it's low. Let's take here an example of Microsoft. Microsoft chart is just destroyed here. It's on this 200-day, 50-day, 100-day, 200-day moving average. It's destroyed. Isn't this a great opportunity to buy Microsoft? They actually did buy Microsoft. Yes, it is. So from where would the company buy Microsoft stock? The company itself. Because this is the best price to buy Microsoft stock. Shouldn't you be thinking, company must buy now its stock back because it's low price as possible and is going to get a good price on its own stock? No, because the sellers want to sell their stock when the stock is high. Wouldn't you want to sell your stock when the stock is high? It's highly priced. It's overpriced even. So I don't think they're going to buy back their stock here. And this is mostly why you see stuff like this and you think to yourself, so this is the other side, just take a look here. So this is overbought. Now you should see a pullback here, and this pullback is even for even higher all-time high. Somewhere here is where companies actually buy back their stock. So there we go. That's my rant on buying back stock. So I'm still sticking with Warren Buffett's idea that companies should really, really rarely buy back their stock. I think I mentioned this in my previous video. Warren Buffett would ask, let me just take a sip of coffee, a short coffee break. I love my coffee. I just love coffee. Warren Buffett was asked, why isn't he buying back Berkshire Hathaway stock? And the question is just amazing. He said, if our stock is that low of a price, so it's underpriced, most likely that in the markets are many great companies that have underpriced stock. So should I buy back my own stock, or should I buy great companies at great prices? Yeah, but that's Berkshire Hathaway, and Microsoft does not buy other companies. So there's a rationality there for why companies like Microsoft buy back their own stock in other companies. Berkshire Hathaway buys actually, that's a big difference. They also buy stock in order to buy and sell it, although Coca-Cola is one of those stocks that they're, I think, never sold. But when you're buying companies, they're buying big chunks of the company. Either they're buying the entire company, aka Geico, or they're just buying massive positions in the company, so they have ownership, and they're getting the income from the company, so not getting or usual dividends, that they're negotiating their own dividends, aka Occidental Petroleum. So, well, I'm not even going to do a risk assessment for the next week. I want to keep this video as short as possible because I have a lot to do about this. I'm going to come with a bigger video, a much larger video next week. But for now, I'm just going to tell what I'm going to do next week or the upcoming weeks. I'm going to watch for a rebound. And on that rebound, I'm going to sell a lot of stuff. I'm going to massively reduce my risk due to the fact that I see here problems ahead. I think that there are problems ahead. And I think we're going to see a 2022 repeating here. Okay, so each time I'm going to have the opportunity to reduce my positions, I'm going to use that opportunity and trim down. Whether that is laggers or losers or the big winners, I'm going to take some profit, and I'm also going to reduce my risk exposure. And just wait until the dust settles, until most of the problems like tariffs are solved. The war in Ukraine, which will be solved this year, I believe. With Europe, also problems in Europe. So the DAX was ripping. So just take a look at the DAX, German index. Take a look at this. This is going to have such a big fall, going to tremble. Okay? So if you invested in the DAX, take care. Also Rheinmetall, take care. Please do not grow to the sky. Okay, let's take a look at next week's earnings. We will have, well, major companies will be on Monday, Oracle. Then we're going to have on Tuesday, Dix and Casey's Generals. Then on Wednesday, Adobe. Oh God, please no. So I sold my Adobe stock. Man, it's an annoying company. And well, that's basically it from what I'm watching for. But also major events. Look at it. I'm not even going to go over my portfolio. I'm red in some of my positions, green in other positions. Interestingly, one thing that I do want to mention, I'm looking for entering or increasing my positions in the US long-term, the TLT, long-term treasuries. They have started here and make the sell signal. So let's see how low this can get. I'm going to massively add back to this. Because if inflation drops, think about it. Inflation drops, unemployment, Doge makes his stuff, lays off about a bunch of people in the private sector, in the public sector. That is going to influence the private sector because, okay, they are in the public sector, but first of all, they are going to reduce their spending. So it's going to reduce profits. And then they're also going to reduce their spending, the secondary effects, which were those that were servicing our public services, if that makes any sense for you. So it's going to have a double effect, and it's going to have a major avalanche effect in upcoming months. At least that's what I think. Or they're going to employ everybody back. Those deportations are going to influence because those jobs are gone. Somebody else has to take those jobs, and if it's a native US worker is going to charge more than a immigrant, for example, is going to drive prices maybe a bit up, or they're not even going to employ new workers. So I would say that next week is a pretty risky week. The next entire month is a pretty risky month, but we could see next week a opportunity for rebounds and a reality check if we want to continue with our positions or not. So that's it for me. I'm Noble PM. Like and subscribe. Catch you next time. Stay safe out there. See you in the next video. Definitely. Bye-bye.